past, what we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Claude Walker from A Rich Life. How you going, mate?
Well, thanks. All the better to be here chatting with you today.
Likewise, mate. Likewise. What's been happening? It's been about a month since I've spoken to you on the show.
Yeah, well, I don't know. I guess since we last talked, the big rebound started losing its legs, and we had a few more jitters lately.
Yeah, well, yeah.
And then in the last few days, it's been up and down, hasn't it?
Yeah, then we had the Bank of England come out and do some shenanigans, and yeah, stocks ripped when the RBA came out and upped rates just by 0.25 or 25 basis points. So, did you see that coming? I don't know. I know you bottom up, mate, but we're going to talk about top down today. So, did you see that coming?
I did. I don't even try to see what the next actual rates decision would be. I try to make the decisions about interest rates and inflation on like a lower, slower timeline that sort of guarantees that I'll be slow to react, I guess. But just because I don't want to be overreactive to these things, because what really matters, it's okay if you're on the wrong side of some rates movement that's like a short-lived thing. Like, didn't we have something in 2018 or whatever, remember? Yeah. I remember there was a sell-off. It wasn't too brutal or anything, but at the time, people were starting to get the jitters. But then it just powered on. So I don't want to be reacting too quickly to that kind of thing. So I still maintain that we're in a new kind of regime from what we were in 2021. We had like massive amounts of money, low inflation, low interest rates. They just kept the interest rates low, even though the economy, if you just look around you, was just obviously pumping. Just remember the days when like every second mate you knew had like made a few $1,000s on crypto. Did that happen to you as well?
Yeah, and then even recently, like they made a doco on Netflix about GameStop, and I was just thinking, okay, like
the top is definitely in.
yeah, those days are gone for GameStop traders and speculators. Like it's when that's happening, that it's a rare occasion, and I
think it must have been like 6 months ago that I was like to my normal life friends that are interested in finance, just be like, look, if you have money in crypto, just remember it's a speculation, and wherever you're storing that money could go bankrupt.
Yeah, we've definitely seen that. I can't remember. I think one of them with pause withdrawals the other day, like one of the big names. I don't follow it that closely. I've got basically all of my one NFT in OpenSea, and that's about it. And I think I'm down.
The one that I liked,
95%.
That I've tracked the most was one called Tulip Coin Protocol, because I figured that was the stupidest crypto that ever got made. And that thing got launched. Right? Yeah, exactly. That's like, this is a crypto named after the dumbest bubble in the history of mankind. Yeah. And I feel like with the launch of Tulip Protocol, crypto finally surpassed tulips as the dumbest bubble of all time.
Yeah, for those of you that can't remember back a few hundred years ago, tulips were all the rage, and early days of the first crypto boom was basically like, if you just overlaid those charts, I don't know if it was a chart crime or not at the time, but you could just overlay those charts, and they almost looked like the perfect thing, like crypto leading up to 2017 and tulip prices way back in the day. But hey, mate, we're gonna talk about actually one chart that you like shared recently with A Rich Life readers and supporters, and I thought this would be like a really good jumping off point for a lot of investors who are thinking, like particularly like active investors who are thinking like small caps have been beaten up, even like large cap US, more growth oriented stocks have been absolutely walloped. So people are just thinking like, how do I develop a framework for dealing with this type of thing, and how can I think about when I should be investing, or if I should be investing? Like, I've seen a lot of stuff around like, don't fight the Fed, like comments around like, basically it's so hard, you're not going to win. But I feel like just part of me thinks that like there is a time and a place to invest, and like we can blend the top down with bottom up and like have some actionable steps in place. So this is like clearly I'm not the only one, because you came out and said, there are basically 10 signs that will make me want to buy stocks, and I'll link to the post in the show notes for anyone that wants to read it. It's great because you included a chart there, mate, which is basically showing like the market, not the market cycle, but I guess like, I don't know, what do you call that? Like in the psychology of the market?
Yeah, a market sentiment cycle. Actually, where does that chart come from? I really need to reference it. I've written somewhere. It's some sort of educational provider, I think. And look, I mean, the basic idea doesn't belong to anyone. It's just the idea of sentiment changing over time. The illustration itself is good because it has the words that sort of talk you through it, which are, sort of starting at the midpoint on the way up, you have optimism, then excitement, thrill, euphoria, denial, as it comes off, anxiety, fear, depression, panic, capitulation, despondency, skepticism. And then, so despondency is the bottom there.
Yeah.
Skepticism is the, feeling people feel when it maybe starts to come off the bottom and people are all like, oh, do we trust it? Of course. And then hope, relief, and optimism.
And you start again.
Yeah, that's right.
So if you look back on 2021, like, or even
we're
late
far enough
2020,
past the peak now, right, where we can identify the peak. I mean, people say, oh, you can never pick the peak or the very bottom, and that's true. You can't pick it at the time, but you can look back in the course of history and be like, yeah, that was the peak of that sentiment cycle. And I think market prices, stock prices aren't necessarily in sync with the actual sentiment cycle, but I would still argue that they are like a reflection of it to a large degree. So I think it's fair to say sometime around the end of 2021 was sort of the peak of the sentiment stuff. And I can remember the feeling myself looking at my portfolio of quite high, high priced growth stocks and just not being able to justify the valuation, yet fighting the irresistible urge to just like, get on it, not sell a single share. It's like going up, it's going up. Every time I'd sold previously, it had turned out to be, too low, and the thing keeps on going higher. It's your own psychology is self-reinforcing because, on the way up last year in 2021, I mean, if you sold some shares in a high price stock that's a high quality business on some, really high PE multiple, and if you sold those shares in July, you could well be looking at, the shares be 25% higher by the time we got to October, November. And so every time you've sold on valuation, it's been kind of wrong.
Yeah, there's always been this feeling of, it seems like over the last, at least, I guess, and maybe this is just like symptomatic of all bull markets, but it seems like the last few years for a lot of investors, it's been like, okay, let's focus less and less and less on valuation because we're in a new era. Like this time it's different, right? And I think like you said, you can't pick, I believe you can't pick the bottom or the top perfectly. Like some people would probably carry on and say that you could, but I think for most people looking back on late 2020, 2021, some of that stuff was just crazy. Like I'm looking at my JPEG, otherwise known as an NFT.
And that's so good. We're going to talk about your JPEG forever. Like it's going to be funny. How much can you pay? Did you pay for it? Will you tell us?
Not that much. It was only $600, but
it's said before. Only $600, mate. I'm going to screenshot it. So can you send me a screenshot?
Yeah, for sure. And I think it's the current offer on OpenSea is about $30. So
nice.
Tax loss. Now the ATO wants to tax them.
The NFT. Nobody else has the NFT but you, man.
That's it. Yeah. So it's me. I'm legit. Identify me. So I mean, we're making a bit of fun. I'm sure there's some use case out of Web3, but I think that's like I was watching this, just briefly watching this doco on GameStop, and you could tell that. That those emotions which you mapped out there on that emotional kind of like cycle is like euphoria. People were saying in that they woke up and they were like $50,000 richer than they had been a week earlier, and they were just like blown away by it. This is people that have never invested before in their lives, right? When I say investors, like quotation marks. So, and then like you can track, like I think there was like a thing like the Reddit guy, he came out and posted like updates from like Portnoy. I don't know if you know who he is. It's like a YouTuber.
Yeah, I saw that. I know exactly
Yeah.
what you're talking about.
Yeah, and it shows like over a few
And
years
just the
different
tone of it
emotions.
changing.
Yeah, the tone of it, like his updates were just like changing over time, and
He's
I
like,
think that's,
I'm better than Buffett. It's the best thing, and it's like
yes.
he just leant into the hubris so hard. It makes it
Yeah, so that
funny.
would have been the thrill part of it,
Yeah.
and then the euphoria when he's made some gains, and then on the way back down, like, I mean, it's all. I think he'd say it's all like tongue in cheek and whatever, but like a lot of people are feeling. I would say, I don't know if we try and just like pick it right now. I would say a lot of people are in that cycle of like they're on the way down. And if they're not on the way down, like what are they thinking? So like just to recap on some of these emotions, you start with denial, anxiety, fear, then you slip into like depression, panic, capitulation, and despondency at the bottom.
And so the worst possible thing you can do, which will probably mean you'll take a lifetime to like get over your mild PTSD from investing in the share market, is to sell in that despondent stage, basically.
Yeah.
And to be fair, most people won't, because most people are despondent. They've like completely stopped. They've completely stopped logging in, right? It's the capitulation really when the last people that are going to give up, and then despondency, you just stop logging in. And I feel like for some people, like the way that I think you can survive a cycle as well is just to switch straight to despondency.
Yeah.
And just don't do the panic and capitulation thing. But you have to watch out because, if you haven't already panicked, the panic might come at some point. And you probably, if you're actually selling in a panic, it's really a coin toss of whether that's going to be a good decision or not. It would depend on the exact situation. But you definitely don't want to be making sell decisions in a panic.
I think a lot of people, right? Well, yeah, everyone notices this. There's always someone that's like waiting for something. There's it's going to crash. I'll wait until X. And I find that a lot of investors, they look forward and they say, the market's about to crash, but then they look backwards and they say, well, that was the best time to invest. And like a lot of the time, the emotional constraints that come with that just do not lend themselves to identifying those moments. So maybe if we jump into these 10 things, mate, like around about like how you've thought about this from an economic perspective and how that then informs your bottom-up research. So, because neither of us are here to say, hey, we're going to tell you exactly when the market's bottomed and everything's going to be good from that moment on. But like, even just having some of these signals, I think was really valuable for a framework.
Yeah. So the reason I do the signals is because the longer I've invested, the more I've realized that it's so hard. Like the phrase, it's a quote from somebody else, not me, but it's basically like when it's time to buy, you won't want to. And that I think that one of the things that I really realized coming out of the flash crash kind of that we had at the beginning of 2020 was I started buying. There weren't enough times when I just like sucked it up and bought something, basically.
Yeah.
I wasn't super consistent with that. I did do some buys and they were really, really good buys, but there was some massive missed opportunities there with like absolute layups with high quality businesses that I knew were going to be around no matter what. They weren't going to go to zero. I'm not talking about flinging money at like some loss-making idea stock that, could have massive great potential, but like also could just full go to zero. I'm talking about stuff where you actually know it's not going to go to zero. It might go down more, but it's not going to go to zero. It's still going to be around, trying to exist. And so the sort of this generic idea now that I'd have where I want to buy 10 stocks. When I see these 10 things, this will create up to 10 occasions where I'll just make sure I'll buy some stocks even if I don't feel like it. And the idea is just to have like an automatic system that makes this happen. Now I've probably made many of them, they're not ideally designed necessarily. And I'll continue in my own time adding to my list of things like that will make me want to buy stocks. But the basic idea is that I'm looking for signs that we are close-ish to some kind of inflection point where things are, at least on one measure of it, going to improve. So there's in some ways, in the markets, the most dangerous, the time when you don't really want to be buying is when something bad is about to happen. Like, now, what can also happen is that sort of gets priced into the build up to the bad thing happening. And then when the actual bad thing does happen, sometimes the markets might not even, go down on that day because it's fully priced in. And maybe oftentimes, in some ways, the bad thing happening that everyone's been fearing, that can sometimes be the bottom, because then the thing that everyone's been worried about is like out of the way and everyone knows it's an 100% truth. And then it's more about what's happening next. So it's always that forward looking thing. So sometimes the bad happenings can be at least approximate the bottom of the cycle in some ways. And that's how these things happen, right? Because let's just imagine, this is the last little metaphor to paint it, because I'm sure everybody understands what we're talking about, but just imagine you had one guy that is always looking at price to sales ratios, and he always just cares about price to sales ratio. The only time he'll analyze a stock is he's like, oh yeah, what, 10 times price to sales? That's good for, this other one's at 20 or 40. And that's the only way he looks at stocks. And even in times like now, he's going to be sitting there being like, oh, 4 times price to sales, it's crazy low. Never even talks about profit. There's another guy who literally will only talk about free cash flow or profit, and he'll never even look at the revenue growth or anything. The only thing he cares about is free cash flow growth. And in the good times, he's like, oh, that's at 50 times free cash flow, no way, no interest in that. And I can hardly find anything good that's on 4 times free cash flow or whatever he pays. This day and age, he's like excited about the stuff that's on low cash flow. Like, those two guys are always going to have that opinion. What's happening in the markets is there's a horde of people who one day they're like more listening to the free cash flow guy, but then another day, a year later, they're more listening to the price to sales guy. And the sentiment in the market is the sociological herd of people moving from one to another. And it's self-reinforcing, because if you have just spent the last 6 months listening to the price to sales guy who was banging on about buying, software stocks at whatever multiple in December last year, you've lost 50%. So you're like, yeah, I might go and listen to this price, like this cash flow guy who got long the coal companies, and he's like done really well. And so more people are going to that guy, and that pushes up all of those stocks relative to the, to the maybe more growth stocks that don't have a profit yet. And that's the sociological trend at the moment. We're in a trend where things are going towards that the price to the cash flow guy, basically, and that's fine. But that's just like another interesting way to think about it. And you would sort of say, when you're going to have the most conservative market, when it's maximum cash flow, like all of those, everybody loves the value investing again. That might be another sign it's time to just deploy. It's a bullish sign, because if all of the optimism has just gotten sucked out of the market, then that creates the setting for when the tide goes the other way.
I haven't heard that before. I haven't heard where...
I literally just made it up then. So I promised you some exclusive content. There we go.
Yeah, that's great. No, but the first bit is also equally valid for people that don't understand that the market is forward-looking, right? So, and this is not just the stock market, it's any market. It's the bond market, it's the economic market, it's just every market is forward-looking. So, like when interest rates from the RBA only go up 0.25%, that's a good thing. But like 6 months ago, they went up by 0.25%. The world is coming undone, right? So it's those expectations that are so important. So you've given me an extra one there, and all listeners can think about these two different people, and also that the consideration around style drift as well, which happens a lot. Like a lot of people don't have a plan, so they kind of just blow in the wind. Like they don't have a framework or process. And that's in my opinion, that's very dangerous to invest that way. To just invest and be like, yeah, I'm growthy today, and then tomorrow you wake up, you're like, oh no, growth is not good. Like
yeah, whatever you're doing, you have to try to understand it in the context of what's going on overall, because whatever you do, just understanding things helps to stave off that panic. So that's another thing. Like, I had long ago cut my exposures to, loss-making tech stocks, but I also made that decision back when I was cutting most of them. That after I'd finished the sort of my phase of cutting and getting ready, I was just going to, pretty much bag hold the rest, because I don't want to sell like a high risk idea I have that's a tiny part of my portfolio right at that like despondency stage when everybody hates a high risk money losing company. Yeah, sure, like it is probably a bad bet, but it's the kind of thing that can just go up massively if it turns out okay from those real sentiment lows. So,
For sure.
But then the thing that I think everyone can do, and sort of perhaps leads on to our next subject a little bit, is first of all, like everyone can have their own signs, and then second of all, everyone have those companies that, well, this is what my approach is. Have those companies that you have a lot of faith in, and you definitely know there's a price at which you want to buy those companies, and then figure out what that price is. And so that's the big one as well. Like once things, it's like a promise to myself, like if this becomes available at this price, I'm going to buy it. I'm not going to lower it again and be like, oh no, I'm waiting for a lower place. I'm always trying to, because that's like that obsession about picking the bottom, and that can make you like miss out on it, because every time there's an up, there'll be like a jag up, and you're like, oh, and it's just this full of this emotional ride, basically. So that's the other strategy, is just have the pre-decided prices and the things. But like before we move on to stocks that you might be thinking of, I thought I'd just chuck out a couple of the signs that I would look for. So one of the ones that I look for is basically companies that I think are that loss-making tech ones that don't have any kind of obvious value. So very hard to see them being profitable, because usually they're in a competitive industry, or they're too small or whatever. I've listed a bunch of them on the article that we talked about, but I don't know if I'll like name drop them all, because I'll probably just annoy a bunch of people. But I've got my list of, I'll say one, like, for example, which I've often said about is like Sezzle and Before Pay. Those like the worst of the BNPL kind of craze. Those are the ones when they stop trading, or like get taken over, or just stop being a thing, go into suspension, run out of money, or something like that. When those kind of companies, when every time one like dies, I have to work on my definition of dies, but that's essentially what it means. Every time one dies, it's like, gotta buy a stock. I have to that day buy a stock,
What a counterpoint. Well, you know what you said, like in the article, you said these loss-making micro and small caps with no discernible business moat, when they cease trading, go bankrupt, or are taken over. Well, Dubber's ceased trading this week, so it was suspended.
Yeah, exactly. So I was wondering if Dubber counts as one I have to buy yet, like, because it's making me wonder now when I talk about it, because it's suspended. But that's what. Well, perhaps you can help me. How long should I give it before it counts?
Well, I feel like a suspension is involuntary most of the time. Like this isn't involuntary. Like they haven't.
Yeah, but
lodged
sometimes
audited account.
people. Yeah, it's true, and that's why I say I think the clock is ticking for them. But sometimes, yeah, I mean, I'd be almost enough to declare it now, because I feel like a 2-day suspension, that's the kind of thing you just put under the rug or whatever. But 2 weeks, I think maybe should be the limit or something.
Yeah, I feel like, just to be clear what Claude was saying before, he's not saying he's going to buy Dubber. He's saying he's going to buy something else.
a way better stock. Not buying the ones that are dying. Just noting their death and mourning it by buying a living and continuing to live company.
Yeah, I mean, so I feel like that's like that's a strong sign. I mean, even if they survive, right? Like that's a very bad sign for a company. So
it shows that funding's drying up as well. So it becomes more of a thing where the stronger companies that have cash on the balance sheet actually can then go and like start, checking out what the options are. I mean, gosh, one thing people forget about a company we both own, Pro Medicus, is that it built itself on a business that it bought off another business at pretty much the depths of the GFC, not long after or around then. And just by having that cash and being willing to buy something that was not yet profitable or not as profitable for the seller, that short-term, long-term kind of vision, that's where the strong companies have an advantage. So every time there's like a flush out of this situation, it's possible that it creates the big winners of, well, I believe it does create the big winners, and this is the ideal time to buy the highest quality businesses, because if you're buying towards the point of maximum opportunity where there's despondency, then it just stacks the odds in your favor that you'll get one very, very, very right.
For sure. And a lot of the companies, I think what's most important is my big regret is during the flash crash of COVID 2020, I didn't have that active list of things that I wanted to buy. My life was I was a bit preoccupied with other stuff in the business, but I just wish I had that list. Like I remember, and I think it also requires you to just accept that there are going to be things you don't know. And, you know, we always invest not knowing what the future holds exactly, but during those times is when it feels even harder. Like it doesn't feel right. And I think that's probably a key sign as well. If like it hurts to make that long-term investment, it's probably, you know, you're probably approaching it the right way. And a good example for me was Square/Block. Like I looked at that during COVID. I'm like, this thing's going to blow up. No one's going to use it.
That was exactly what I thought as well.
And I'm like, look at this balance sheet. Like this sucks. I'm not touching this thing.
And
Afterpay
like, for me, I was like, no, it's gone.
And then like 4 or 5 bagged from there. I'm like, whoa, did not see that coming. So like, you know, at the time I was like very rational about like in a bad market, this thing's going to be very bad, but it's not about getting everyone correct, I guess, as well. One of the things that you asked me to prepare for the show today was like what I would be waiting for. And to be honest, like what I was waiting for was what we kind of have seen in the past week, which is the RBA come out with an announcement and people will be like, whoa, this isn't okay. This isn't as bad. Like I thought it was going to be worse. But what I mean by like, I don't think we're out of the woods by any means, but I think that the market saw that. And I was watching Bloomberg at the time when this came out, and they were like crossing to like Europe and all this sort of stuff. And they're like, you know, basically, did you just see what happened in Australia? Does that set a sign? Like, is that a sign for what happens, you know, around the world? And everyone's like, nah, probably not, because overseas is pretty buggered at the moment. But that type of thing where we see forward expectations reverse pretty quickly is interesting to me. And I think if you get a few of those in a row, it doesn't take long for people to start thinking, okay, well, now what? Like, we're probably still deep in that despondency / skepticism stage, but how do we come out of
this? Is the thing, you always got to pick it. Like, for example, like I don't know exactly where we are now, obviously, but I think that what I'm looking for isn't just the expectations changing necessarily. Like I'm actually looking, because there's one risk that, for example, like they could slow the cuts of interest rate increases and then have to speed them up again. And I think that there's some precedent for that in the like distant past where inflation, there's been more of a battle with inflation. It hasn't just been like inflation, interest rates up, inflation goes back to 2% just like that. So that's why I'm really looking for actual inflation coming down, basically. Yeah, and even when that does, even though I will buy when that happens, I also am still aware that inflation itself could come back down and then go back up. But I do think that, you know, in the next few years, like inflation will be a lot lower, and I would hope that that's sooner rather than later. But even if like inflation bounces around a bit, then interest rates could end up also bouncing around. And I feel like the wild swings of expectation will definitely happen one way or another. Like it'll be rare that the market doesn't react, because it's just uncertainty creates volatility. But yeah, I think that the point is that there's no one sign that's going to be like, all right, this is the bottom, you're all in. You're just looking for like little things to tick off.
Yeah. And like there are many different things, like other things, like the thing that caught me off guard last week was the Bank of England, but more specifically the UK government. I mean, no one probably could have predicted that the government would come in and just be like, we're cutting taxes, giving everyone money, and we're not sure how we're going to borrow it in the middle of a crisis that has high inflation already. So it's like, that's
super bizarre.
Yeah. And so like those types of things happen and you think just, wow. So anything can happen really. But mate, like you've also got, I wanted to tie this kind of like emotional kind of journey that markets tend to go on against some companies. Now you've given for supporters of A Rich Life, you've given 6 names, I think, from memory. But maybe if we can just highlight 2 companies that, one from you, one from me, that would be on that watch list and would be something that I would like to own at a certain price. And when I'm ready to buy, I would be happy to put this in a portfolio. So did you want to go first and then maybe I'll share mine?
Yeah, for sure. I'll go first, but I like yours as well, and I really need to. I agree with it being on that list, even though it's not on my list. So the one that I came up with actually is probably one of the riskier ones that I would put on my list of like definite companies I want to buy, but it's a new entrant into that wish list, which is RPMGlobal, which is also great to talk about with you because you and I have both looked at this company for a long time. You were way quicker to get behind it than I was. I stuck out of it for years because I stubbornly didn't like their coal testing business.
Yes. That's why I was surprised to see it on your list.
Yeah, look, I mean, I like that they divested that. It doesn't really make that much of a difference. It's also just that, like, I've just decided that, you know, I always thought I was never that against them, which is why I covered them and had previously recommended them pretty much years ago in my old job at 40 cents per share, because it was one of those classics where somebody's selling out by the 30th of June. So I think we put I remember like rushing to get the recommendation written so I could get it out in time for people to buy on the 30th of June when somebody was selling. And so, yeah, that was a good one. But RPMGlobal it's really just coming into its own. Its business has massively improved over the last few years. You backed it a fair bit, and I think rightly so, but it's actually still great to see that this transition to a high quality business with more recurring revenue has really taken off. And you can kind of just see that if you just look at how the recurring revenue has gone consistently up while actual revenue has flatlined a little bit, or it's gone up slowly. And this is just a classic pattern recognition you see in the markets where initially, you know, a company basically it wants $1 million. It has a $1 million contract. It gets paid $1 million up front and then get paid $100K for the next 10 years in maintenance. So it used to put through 1 million revenue on day one, basically. And it has those contracts that need to renew. But when they renew it as 250K a year. So over the course of 10 years, they'll get 2.5 million rather than just 2 million. But in year one, they replace what would have been a $1 million contract with a 250K subscription fee. So whilst you're in the process of converting customers like this, that, you know, that's what happens to your revenue. So on top of that, it's sort of at this point, you would expect quite reasonably that it has now, like in the next year, FY 2023, I'm expecting hopefully it makes a little bit of a profit and then strong profit growth from there as operating leverage kicks in.
Yep.
And so I also feel like there's a timing inflection point, which means it would be super handy if it did get to a slightly lower price in the next few months, if there's sort of this generalized sell-off to, I guess, loss-making tech companies, which I think technically still is. So
yeah, it is. Yeah.
So that's like, yeah, well, it is that. So at the same time, maybe it could be a baby that's thrown out with the bathwater. And look, I don't think it has to. I'd just love to see it come down a little bit. My, you know, obviously things could change between now and whenever. Every time we get results, new news is news. But basically, I've sort of jotted down for this one that my price to buy more of it, because I already own it, would be about $1.07 to $1.18. Roughly. So if it gets there, you know, I'll just be like, okay, I have to try and get my permissions through and stuff so I can buy this one now. But so there's no guarantees I'll do that, but that's just like my intention setting sort of now. Yeah. And yeah, you'd be surprised. Like, of course, there's no guarantees that it actually ever gets down to that. And it's been surprisingly resilient in the face of the recent sell-off.
Very.
But yeah, you never know. You get that capitulation. Somebody's just selling. I think there's still a lot of, there's still a lot of potential for loss-making tech to remain on the nose for quite some time, just because it takes so much more like sort of faith to be like, yeah, the free cash flows will justify this when you can't see the free cash flows today.
I agree. And I think that with RPM, like a lot of people was like the narrative 5 years ago was like, it's not profitable. How can you invest in this? But then if you just lifted the hood, you would see that the software division's profitable. Now the narrative is it's still not profitable. But then you're like, yeah, but if you lift the hood once again, you can see that it's growing its subscriptions rapidly, even though the top line might not be where you want it to be. But then you can also see like that mix is changing and it's becoming more and more higher quality. And that's probably what justifies some of the share price that we've seen, but maybe not all of it. Like I think it's a really well-run business. I think there are plenty of risks to it, by the way, too. Like as you said, it's not like perfect. So I think for a lot of investors, just to be mindful, like it's still pretty dependent on the CEO, Richard Matthews. He's like kind of like the guy that's led him through all of this. It is, it still has to service customers in resources and mining. So it's not as bad now that we're through COVID. It can go and sell software, but for the most part, I think it's becoming higher and higher quality, and I like it. I like it too. So maybe I'll just dive straight into my company, which is
Yeah, I'll just add one more risk.
Yeah,
You did an excellent job adding some info about that, but it's also got a significant advisory business, which is not recurring in nature.
Yeah.
So you could have an ironic situation where the software business continues to charge on, even in a recessionary environment, but just the fact of the recession might mean that the advisory business falls into like a loss-making situation, maybe even canceling it out. So yeah, like, come on, market, offer me a lower price.
Yeah, and that could happen. That's what happened for years. That advisory/consulting business did mask the overall business. So that could continue happening, in which case you would still have, people that don't lift the hood not see what's actually going on. So fair point. My business, which is a business that has continued to go up, even though I don't, like, other than currency, I don't exactly know, like, justify the reason why it's gone up recently, which is Altium, ASX ticker symbol ALU. The company like has a really strong operating track record, been around for decades, but it was probably around about 2012, 2013, similar period, maybe a bit later to RPMGlobal, and it made that shift from on-premise software to cloud-based software, and it's still making that shift. But the key difference between Altium and RPM is that it's already very profitable, and so investors, that's why it's a bigger business. It received a takeover offer not too long ago at $38 or so, so it's still slightly below that, and I think a fair price to pay when I last did my DCF was around about like $30 Australian. It's now at 37, and the reason why it's gone up, this was a few months ago, the last time I did my DCF, but I think the big reason it's kept going up is because it earns a bucket load of US dollars, right? And the Australian currency has fallen, and people are looking for that exposure. So Altium, as far as I'm concerned, is one of the higher quality ASX listed software businesses. And
Definitely.
yeah, and I think that if you get the chance to buy it at a price that is like, I don't think you're ever going to get it for super low. Like if we go back to your analogy of like super low free cash flow multiples or super low even price to sales ratios, I just think.
Yeah, exactly. But that's why like this is where Altium and a few of these other ones, it's where they're the last bastion of the price to sales guys, right? In a way,
Yeah,
like
true.
don't like. By the way, I do not identify with the price to sales guy, even though like I do invest in these companies. Like I bought them on earnings when I could justify that.
Yeah.
But then I hold them because if I do sell them, by the way, as well. But it's like I don't sell out all of these ones because then I just end up having a portfolio of way lower quality companies that wouldn't let me sleep at night as much. But yeah, like these are the exact kind of businesses that, Altium's a more classic example of what I'm talking about. Like should have bought it ages ago. Historically have made many mistakes saying it's too expensive. Don't want to be the last guy to buy the euphoria. So just sit out of it for like a decade, watching it go up when I said like, nah, put my bid in at $2.20 when the share price was $2.50 and never got hit kind of thing.
Yep. Yeah, it's
and just
it's one of those ones that I've looked at over the years and just haven't got a full position in ever. Like,
yeah, and now
so
it's like 37. I'm like, should I
Yeah.
bid at $30?
yeah, it was so to go back to like 2000. Like this is for long. Some people this is a long time, but like 10 years ago, it was like 40 cents a share.
Yeah,
So
yeah.
put it in perspective. Like this thing has
It was
exploded.
60 cents when I first looked at it, and it was like $2 something when I first was like, yeah, this looks pretty good. I'd like to buy shares in this, but like just never got across the line and did it.
Like there's like you've got a list of 6 there. Like I could probably add like another 5 to that list that are just like really high quality companies.
I'm definitely going to add to the list. That's like another thing I probably got to try and do, and I don't know when, but like it's easier to choose the first 6 than the next 6, basically.
Oh, for sure. Like we spoke actually a couple of months ago on the pod about the different businesses and how to value them. Like we looked at Pro Medicus and I think it was Objective Corp. So go back and have a listen to that.
And they're good high quality ones as well.
Yeah. But there are others and there are emerging ones too. So Altium's like the biggest of these companies, maybe Pro Medicus slightly, but you know, this is a real high quality business involved in basically like everything becoming smarter. So printed circuit boards are everywhere around this. So mate, go for it.
No, go on.
Yeah, I was just going to say that like for anyone that's listening and wants more ideas, like this is the time to put all of these companies, to learn about these companies, put them on your watch list, because I feel like regardless of where we are in the cycle, the obvious fact is markets are very volatile right now. And so now is the time to do the work. So when it actually comes time to press the button that says buy, you have that conviction. And
if anyone
really
does
important.
want to learn about these kind of companies, not Altium really, but like other kind of high quality, profitable growth companies, often, you know, one hack, if you want to find what I've written about them, is just write, you know, the company name and then a Rich Life reports, and you'll find a company page that has all of what if we've written about that over the years. So that way you can just follow the story of a company.
That's good.
And so for some of these ones, like, well, for a variety of companies, you know, we often write up their results, and we really need to start coverage of Altium. I've just been putting it off for years because I'm like, I'm thinking about it makes me angry.
Yeah, I know. I've got that feeling with a lot of things, mate. And so the longer you go, I was just chatting to a guy this morning that was saying like he bought and sold Nick Scali at, I think he sold it at like $6, and I don't know what it is now, but it's a long way ahead of that. So there are so many different businesses on the ASX that have just ripped over the last 5 years, and the rational person sold out years ago, and we all just like shake our fists at the clouds. But
it's like a lot of these ones anyway. That's the thing, is like you do want to own some of these businesses, because it really, if you own a couple of them, it makes life much better as an investor.
Yeah, you don't need
obviously
many of them.
These ones we're talking about now, like we're talking about the ones that like basically we're still looking to see them fall and get sold off with the market, you know, or whatever. Altium's not that far off its all-time peak, you know.
Yeah.
What was it? It's like about 8.
It was over $40.
It's down about 17% from its absolute peak, which is not much for this kind of business at all.
Not at all, yeah. And I think that's just
RPMGlobal's taken a bigger hit, though, I think.
Yeah, it
so
has.
It's like,
yeah, it's probably fair that maybe there's more uncertainty around
27% down.
RPMGlobal. So
agreed.
Yeah, it's probably fair that it comes off a bit, to be honest, and that's the opportunity for someone that wants to put in the work. And
yeah, that's why I'm like, come on, market. This one doesn't even make a profit. Like, freak out a little.
Punish it.
yeah, exactly.
Yeah, no, it's so just to recap and just in closing, mate, there are a bunch of other companies on Claude's list there. So if you want to head over to A Rich Life, go and check it out if you're a supporter. If not, join. And you can, I think
but heaps of the content's free as well.
I was going to say that one's free. I told
you
right?
about Googling the company name and A Rich Life. That's going to make, it's an easy way. If you're just interested in a particular company, you'll find a lot of the older content we make free as well. So usually if you're just trying to get background on a company, it could be a good resource.
So like Pro Medicus, A Rich Life in Google. Is that what you're saying?
Yeah, exactly.
Okay. Yeah,
or, not Altium though. I'm gonna put an Easter egg on Altium if anyone does it. It's gonna be like a picture of the Doge dog.
All right, mate. Well, it's been heaps of fun chatting to you. I know you're super busy now with A Rich Life, but he's taking supporters. Are you putting supporters on a wait list?
Get on the wait list. We actually did a flash reopen the other day. I was super happy about it because We don't
Oh,
usually
cool.
do that, but we had like a sudden influx of people on the wait list. So I was like, all right.
Cool.
Okay, so I get an email every time. So I was like, all right, do a quick open. So that was good. I'm happy about that. But yeah, definitely keen to invite more people in due course in the next few weeks, however long it takes.
Cool. Yeah, I'll put links in the show notes, mate. Always a pleasure. So thanks for taking some time to join me.
Thanks for having me, and thanks for listening.